Prosper Trading Academy CEO Scott Bauer. Scott, Dow Chemical aside, because it did not have a great earnings report, it's really tough to hold on to gains even when individual stocks have very good news. I mean, just witness McDonald's. It opened at a record high right at the open of $295 on a revenue beat. Robust comp sales. The company said that higher prices are not spooking away diners, and yet right now the stock is off those highs. It's at 290 at the moment. Is this now a what have you done for me lately market, and how will that affect Microsoft and Google when they come out after the bell today?
For the most part, it really is, Liz. And if Spotify was another one this morning. The one stock that stands out to me that actually has held their post-earnings gains is P&G, Procter & Gamble. But overall, it is a very cautious environment. And I think even with good results, even with good projections here, unless they are so far knocked out of the park here, investors are looking at more so the overall environment as opposed to just the individual stock and saying, you know what, I'm going to get out here. I'm going to get out. If I miss 5% to the upside, if I miss a little run to the upside, so be it. So that is the caution that is out there. And it's a difficult environment to trade in. But let me tell you something with specificity to Microsoft and to Alphabet. If they come out with good metrics, if they come out with Azure having some good numbers, they come out with the ad spend for Alphabet with good numbers, and these stocks sell off, I think that's an opportunity to buy them. Now, if we're talking about a couple dollars each, no. But if Microsoft were to get down into the 270 range, absolutely.
Okay, it's at 277 right now, just so everybody knows.
Yeah,
277.
270 or below, so 3 to 5% below here. Yes, I would like that. But if the numbers are good and if guidance is good, because that environment we're in. So it is a risk-off sentiment, absolutely overall. Now, it's not a panic environment, though today we are seeing for the first time in a really long time volatility pop. And we had this discussion last week, Liz, that you know what? You buy protection when you can, not when you have to. So you've got a rush of people now floating in, flying in, trying to buy some upside VIX calls, trying to buy some protection in the S&P to the downside. That's why you're seeing VIX up 15%. That's why you're seeing the new one-day VIX measurement from the SIBO, which just came out yesterday. That's up 50% today.
You know what I don't understand? We keep hearing that the S&P is going to sell off and there's going to be a disaster. And this is the broader market encompassed. 500 of America's strongest and best companies. So you buy a basket of this, whether it's the SPI or the IVV, and you should be doing pretty well. This thing has not gone below 4,000. It is held above that, has it not? And so, I mean, doesn't that bode well for at least the short term? But what about the long term?
It really does. And that 4,000 to 4,200 area, that consolidation that we have seen for what seems like the longest time, that's why you've seen volatility so low. And that's why, we continue to talk about you got to buy it when it's cheap. But yes, if it does break to the downside, there's some room that it can go. I think, a lot of analysts are looking at maybe 3,500 as the next point here. But you know what? With all of the overhang, with all of the dark clouds in the market right now, the markets have held up pretty well.
Indeed.
They have held up reasonably well.
Yeah, perhaps not to the Fed's happiness. The Fed would like to see a little bit of jittery action here, and certainly the labor markets start to weaken just a bit, but they're not truly getting that, maybe a teeny bit. Scott, if you look at the bond market really quickly, you got the very short-term T-bills, the 3 months, which have been the great like 5%ers right here versus the 10 years, which are coming, those are going up, and then those are coming down today, those yields, and then you've got the shorter termed moving higher. What does that tell you right now? What's the market most scared of?
It does tell you there's some fear out there that maybe the banking crisis, and we're certainly seeing that with what's going on with First Republic, is not finished. And then I think what's really playing into this on a more macro level is people are scared of the debt crisis. What may happen with the debt ceiling and accelerating that up towards, end of May, early June, as opposed to in the fall. So that's why you're seeing those real short-term yields have a big premium to going further out.
All right. Low of the session for the Dow, a loss of 336. We're down 311 right now. Scott, great to have you. Thank you so much. We need to get to General Motors.